Hey traders, welcome to Quantsapp. My name is Varun, and actually trading using price action is quite difficult, right? I know a lot of traders find it difficult to trade with the help of price action, trade with the help of chart patterns and stuff. There is day high, low break, and then there is range breakouts, breakdowns. Even I find it a bit tedious sometimes. So to solve this problem, I am here to give you a solution for this particular thing. Okay. So not just that, I am also going to showcase how you can identify which breakouts could sustain, which breakouts could not sustain. Right. So how to analyze that? It's quite simple actually. So I'll explain the concept, then I'll explain how you can do it. So what to trade, how to trade, both of these things I'll cover. Okay. So for people who are new, for people who do not know me, my name is Varun. I am the trainer here at Quantsapp. I teach people how to trade and a lot more things. And the people who have been watching, your support has been tremendous. I appreciate all the feedback that you have been sharing with me so that I can improve upon myself. That has been awesome. So I am here because of you guys. So it's always, a lot more humbling towards me as well. Okay, so let us start now. I know I have recently started these English videos, but still the support nonetheless has been really good. Okay, so what I'll do one thing, I'll just share the screen of Quantsapp and then we can learn about the concept as well. Okay, so you should be able to see the screen right about now. All right, okay, so this is the screen of Quantsapp, web.quantsapp.com. So since I'm on desktop, I have opened the web app. But if you're on Android, iOS, or whatever you're using, you can find a mobile app as well. So for desktop devices, we have the desktop app. And mobile devices, we have the mobile app, which you can install through the app. Okay. All right. So this will be a relatively short video because again, there's not much to learn, but still I will explain a few core aspects of these things. Okay. Let me just open charts and let me pull up Nifty. Okay. Let me just pull up Nifty. I'll just open Nifty. All right. So this is a 5-minute chart of Nifty. Let's look at today's data. Okay. This is today's data. Okay. So a lot of the times there are these day high breaks. Okay. So let's say if I look at day high break, for example, this was the day high. Okay. After that, market fall down. Right. So I'll just mark this day high with a horizontal ray. This was the highest point in the day, right? There was a day high break somewhere around here, right? Or around here. So this was the part where the market broke its day high. After that, you can see that there was a nice rally, right? There was a nice rally. And then somewhere around here, you would have booked your profits and then you would have squared, right? So nonetheless, even if you held it till market closing, there was decent profit that you could have gotten. Let's say from here all the way to here, right? You captured somewhere around 43 points when it comes to future price, right? Option premium might have given slightly more returns, but you get the point, okay? But this does not always work. Like for example, yesterday, okay? Yesterday, if you look at this was the day high, right? Market actually slipped from there, okay? Then market tried to recover, okay? Then market experienced a day high break. It experienced a day high break, but this was a trap, right? It was a trap. It again experienced a fall. So this is how you can analyze certain things. But day high and day low breaks, majority of the times, are the way to go. Whenever you are trading, day high breaks and day low breaks are the way to go. And along with that, you need to look at open interest data as well. Along with that, you need to look at open interest data as well. Like for example, if I just search for built up. So built up script symbol, if I open built up script symbol, okay. Let's say if I look at the stocks that have long built up and the top gainers of the market. So the top gainer of the market is GNFC with an increased open interest of around 60%. So GNFC today moved up by around 10%. And the open interest of that particular futures moved up by around 60%. right? Same thing for the top loser. If I look at short, and if I see the top loser, PFC is the top loser with an open interest of around 16% addition. Let's look at their particular chart. Okay, so if I just open charts, same thing, you can pair it with the technical setup, but I will explain what to do in a second. Let's first look at GNFC. Okay, GNFC. This is GNFC's future price, and I will add a simple OI indicator or open interest indicator. Okay, this is futures open interest, right? So here you can see it opened somewhere around here, right? This is a 5-minute chart, so keep that in mind. Okay, this is a 5-minute chart. After that, GNFC actually moved up. GNFC moved up. There was a day high break somewhere around here. You can see that there was a very decent day high break somewhere around here on this scan. You can see that open interest was also continuously increasing. So this actually works well in our favor because market was moving up and open interest was actually moving up. So this means that more positions on the long side. So you can see that this rally was pretty much there. Same thing if you look at PSC, Power Finance Corporation, PSC. PSC actually opened gap down. So let's look at some other example. Hero MotoCorp maybe. Hero MotoCorp. I don't want a gap down. I want to see an intraday move. Right, so intraday move was somewhere around here. So let's just mark the day low. This was the day low. There was a day low break somewhere around here. And you can see the open interest started to increase. So first open interest did not increase, so market was consolidating. As soon as the open interest started to increase with the day low break, the Hero MotoCorp price started to fall down. Right, so this is how you need to correlate futures price with futures open interest. Now, we need to identify a particular tool which helps you in directly identifying which stock is experiencing a day high break and a day low break, and whether the open interest is at its peak or open interest is at its lowest. So open interest peaks are something that are important. So I'll just go to the day high low widget. So it's a widget. It's a very small widget. You can slide it anywhere on the screen, right? Day high low widget. Or you can just see it on the home screen. So days high low, you can see it's right there as a widget. Since market is closed, there are no signals. But during the live market, there are signals. So you can see there is symbol. So you will find the name of the stock here. The price, which is the current price of the futures. You can see the price change percentage. So the percentage change in price from the previous closing. Okay. You can see the OI change percent. So OI change percentage from the previous closing, and there is a signal for day high, day low. So there are 3 main types of signals that we need to look at. Okay. So there is price high. Price high means the stock is experiencing a day high break. So price high is 1. Then there is price low. That means the stock is experiencing a day low break. Right. So that is price low. And third, most important, is OI high. So OI high will show you whether the open interest is at its peak or not. Because believe it or not, open interest also experiences breakout. Like you can see, there was a day high break in open interest somewhere around here. And from there, market started falling down, or Hero MotoCorp started falling down. So this is something that is here. So these are the 3 types of signals that will help you in becoming a better trader. You don't even need to look at open interest actually, right? You don't even need to look at open interest. You can just have some technical setup that you use on a daily basis. Let's say the setup I use is EMA and RSI along with that. I'll just give you the settings as well. This is something that a lot of traders use. How I use it is I set the EMA as 20. So 20 candles EMA, so exponential moving average. And RSI, I just set it to the style. I change the style of RSI to 60-40. Okay, 60-40 RSI, I remove the middle limit. Click on OK. Okay, so if RSI is below 40 and if price is trading below moving average, as soon as the low is broken, I execute a bearish trade. So since the low was broken somewhere around here, I execute a bearish trade. This is my stop loss. Moving average is my stop loss. So if a candle is closing above moving average and if the high of that candle is broken, I will square off. So here there was a very close exit, but there was no trade exit because the high of this candle was not broken. Right after that, it kept on falling. Again, the high of this candle was also not broken. So the trade was continued. So I would have entered somewhere around here. If I was trading, I would have entered somewhere around here. And probably I would have held it till market close. Right. So this is the move that I could have captured. When it comes to GNFC, then let's see GNFC. So it's for GNFC, if I am clearing everything, GNFC, this around here, it would have been an entry somewhere around here. So on the high of this candle, because RSI moved up, right? And then I would have exited, say, market closing, because the low of this candle was never broken. So somewhere around here, I would have squared up from here all the way to somewhere around here. This is where I would have exited. So this is the move of GNFC that was captured. So day high low, you can use day high low on a pretty regular basis. I use it. Day high low is something that I use on a daily basis, and I can pair it with any technical or any derivative setup. All right. So that is it for me. I hope you guys enjoyed this video. It's very short video. All the best on your trading journey. I will see you very soon in the next video. And thank you so much for your love and support. I always appreciate it, and I always try to become worthy of it by improving myself. Okay. Thank you so much, guys, and all the best. Thank you.